although some people may have forgotten or even dismissed the stock. A major announcement like the one they got this week could power this stock for growth for the next 30 years. What's going on, everyone? My name is Andrew and welcome back to Broke Man Finance. I'm super pumped about today's video because Rolls Royce just had a major announcement that could push this stock to an area of growth and expansion that investors haven't seen in a very long time. In today's video, I'm going to cover some updates for the company and really how that overall affects the stock price and whether or not now's a good time to buy or should you wait a little bit later. Now, this isn't the Rolls Royce car that you would see on TV with a celebrity or a famous athlete. This is Rolls Royce Holdings, or ticker symbol RYCEY, and they produce aircraft engines for civilian and military aircraft all across the world, and additionally, they provide power systems to yachts and businesses. Let's jump right into the good stuff and the main reason you probably clicked on the video. The big news this past week, Rolls Royce come out and had an announcement that said between private investors and the United Kingdom government, they have been cleared to start developing their small nuclear reactors. The initial deal is reported to be worth over $617 million US, with the majority of those funds coming from the United Kingdom government. Now, these small nuclear plants have really been in the works for a while now, and I've covered them in my past videos on Rolls Royce. At that time, they were planning on building roughly 16 mini sites across the country. Whether it's the United Kingdom, America, all across Europe, the world in general has focused on reducing net carbon emissions and going more towards tackling what has been called climate change and the climate concerns. And this fits perfectly into that agenda. The United Kingdom has pledged to go net carbon free over the next couple of years. And while there is a focus on renewable energy, in order to keep the country powered, right now, nuclear power is the only way right now for it to be successful. According to an article by Yahoo, almost half of the country's nuclear reactors is set to retire by the year 2025. So this comes at the best time for the company. But here is why Rolls Royce's nuclear power reactor is the best option. They have designed what is called a small modular reactor, or also SMR. Rolls Royce said that the power stations would occupy about 1/10 of the size of the conventional nuclear power plants, the equivalent footprint of 2 football pitches, and the power approximately 1 million homes. The firm said a plant would have the capacity to generate over 470 megawatts of power, which it added would be the same produced by more than 150 onshore wind turbines. The ability to spread these nuclear power stations all across the country not only reduces the footprint of one major nuclear power plant, but it also benefits the power grid as well. It also provides an economic boost to the country, and it is estimated over 50,000 jobs could be created over the next 30 years alone. When you look at this option, it tackles several issues for the United Kingdom. First of all, it's a cheaper fix to the current aging nuclear power reactors that is set to expire. Second of all, it's cheaper to build these and it's able to put it up a lot faster and quicker. And third, it addresses an immediate concern for those that are worried about climate change. But when it comes to nuclear power, Rolls Royce isn't satisfied and hasn't limited itself to just providing power for the country. It's also looked at the space industry. A while back, Rolls Royce came out and said they had partnered with the United Kingdom Space Agency in looking at providing nuclear power for future space endeavors. This is a major partnership since right now we are at a time where the space race is estimated to be over $1 trillion industry between governments and these 3 billionaires trying to prove who can win the space race first. It opens up a new sector for growth and also revenue for the company. In another major step for clean energy, Rolls Royce has been developing its MTU gas engine portfolio for power generation and cogeneration to run on hydrogen as fuel. Already today, gensets powered by the MTU Series 500 and Series 4000 gas engines can be operated with a gas blending of 10% hydrogen. Beginning in 2022, operation with a hydrogen content of 25% will also be possible. And then moving into 2023, they have designs to have these same engines to be able to run on 100% capability of hydrogen fuel. Now, to me, it doesn't matter if you're into climate change, if you're into technology, or if you're overall into innovation. The ability to have engines the size that Rolls Royce manufactures and produce for customers to be ran on hydrogen 100% is a major step forward in whatever sector that you're looking at. Now let's talk about what investors really want to know about when it comes to it, and that is the stock price and how exactly good news or good announcements like the ones that they just pushed out will affect that stock price today and the next couple years. They are currently sitting at $1.89 a share at the time of this video, while still being down over 30% for the year. But just the past 6 months, they have increased over 30% due to the positive news and the progress made by the company. Now, when I say progress, to me, that is defined by increased revenue, debt reduction, and how they're able to generate more free cash flow for the company. When I first started doing videos on Rolls Royce and highlighting the benefits that this stock could bring to your portfolio, at the time it was about $1.53 a share. And I've always stated that this is a stock that would probably be a slow rebuild based on some issues they had in the past. The majority of analysts even come out and say that this is not a stock that would jump 30 to 40% overnight or really in a week's span. Most investors are aware that this stock took a major hit when the airline industry pretty much shut down due to COVID-19. But with the travel industry coming back to normal, major announcements such as the nuclear and hydrogen power, renewed contracts with governments to replace aging engines, they have a very bright future ahead of them. But when we look at the stock price, we have to be honest with ourselves. Back before the shutdowns and before they lost a lot of revenue, when they was trading around $8, $9 a share, I don't think that's a reasonable target to get back to. And mostly that comes from their stock dilution. However, when you look at the data provided by some of these analysts, they are projecting the stock could hit an average target price of close to $5 a share in the near future. So with a stock that is trading close to $2 a share and the potential for it to jump $2 to $3 over the next year to next really 3 years, this is an investment that could bring some stability and overall growth to your portfolio. That's it for me today, guys. Thanks for watching. Thank you for supporting the channel, and I'll see you on the next one. Later.